Hey guys, welcome back to Toto Capital. In this video, I'm going to run through a trade recap on AUD JPY here. This is on the 4-hour time frame. Currently, this trade is running around a 1 to 9 risk to reward. Just to put that into perspective, if you risk 2% on this trade, you would currently be up 18% on your live trade. Also, into perspective, if you're trading a 100,000 USD account, a funded account, if you risk 2% on that trade, that would be £2,000 or $2,000, and you would be up over $18,000 potentially on this trade. Okay, that's just sort of the extent of this trade. Don't get me wrong, I did not capitalize on all of that move. Okay, but it's nice to know the potential of this strategy. Okay, so let's jump straight in here. The first thing I want to show you guys is this is the weekly recap video, my weekly watch list and setups that I did at the weekend. You can see here that this was the exact move that I was predicting on AUD JPY. And that's exactly what played out to the decimal there. Okay, so let me run back. So this is the before. This is the before prediction that I had, and then this is after. Okay, so let me run through the trade step by step so I can show you guys exactly why this trade was executed and why, you know, this setup was taken. Okay, so let's zoom in, guys. Let's jump in. Let's go into full screen mode and get a good view on this market. Okay, so clearly in terms of moving averages, this is the 50 moving average. And you can see it's starting to slope to the downside. We're also below the 50 moving average on the 4-hour time frame, so that's an indication that we have some bearish momentum to the downside, and it is a confluence just to stack in our favor. Okay, so what we saw was a strong break to the downside. So we can mark this on as a BOS. So this is a break of structure to the downside. This indicates to us as traders that the sell structure is bearish, okay? And I want to illustrate that for you guys now. So we have a low in the market. Let's mark that on as red here. So we've got a low in the market, followed by a lower high, followed by a lower low in the market. So in terms of market structure, we're making lower lows and lower highs. So we're looking like this, right? So we have a low, followed by a lower high, followed by a lower low. So we have bearish market structure. So we're only looking for shorts on this market. So the bias is bearish. So now that we understand that the bias is bearish, we can go ahead and mark on our invalidation level. The invalidation level is the most recent lower high before the break of structure. Okay, we can mark that on as a guarded high. Okay, I also want to go ahead and mark on the impulsive move, and this is the only area that we're looking at trading off. This is the trading range that we're looking at trading from. So this grey box here identifies the impulsive price action to the downside, indicating to us as traders that this is a bearish impulse to the downside, so we're only looking for continuations to the downside. Okay, we can then go ahead and mark on our POI, which is our point of interest. And that is the only area where we are looking... Oh, okay, I just played that on by mistake there. But the POI is the only area where we're looking at taking a trade from. So if and only if price comes back into our POI, then we can look for a short trade and look to take that to the downside and look to run some of these targets lower. Okay, so that's our POI. Then we need to wait for price to come back to our POI. So we set a limit order, or if you want to watch, you can set an alert and allow price to come back to this area. Stop loss goes above the guarded high. So I had a 20 pip stop loss on this one. Okay, first target is going to be down to the low. So we're going to be targeting equal lows. Let's zoom in, guys. Equal lows here. And then we're going to be looking for further continuation to the downside. So this is the low here, and this dollar sign represents liquidity because ultimately we're going to be targeting the liquidity below that low there. Okay, so we're waiting for price to come back into this area, and you can see we are triggered into this trade right here at 95,450. Stop loss is 95,650, 20 pips on this trade, and then we're allowing this sell trade to play out. So we're triggered in the market right here, and we're allowing this trade to play out. And let's have a look at what happened here. So you can see instantly within the next 4 hours of being tagged in, price had already smashed a 1 to 3.5 risk to reward. So, you know, if you're risking 2% on the trade, a logical place to take a lot of profit is at this low, and that is a 7% gain on this trade. Okay, so, you know, if you're taking most of your position off at 3R, 3.5R, you're looking at around 6 to 7% on this trade. Okay, and, you know, the logical thing to do is to take most of your position off at 3R, 3.5R, maybe 80%, and then allow a runner to run. Because if this happens here, look what happened, guys. And 1 to 9 risk to reward was achieved on this one trade. So that runner then would have, you know, that runner's then made up for essentially another trade within one trade. So yeah, very, very interesting trade, guys. Trade recap. And you can see ultimately, you know, any buyers that are retail traders that are trying to get in this market too early, their stop losses are going to be below here. And that's where the institutions are going to look to run them orders. Okay. Another thing to note on why this strategy works is because, let's zoom in. So institutions, they need to buy heavily in order to create the liquidity to move this market to the downside. Okay, so when price comes back into this area, the institutions who bought, and yeah, so the institutions that bought, they are going to look to close them positions at break even. Okay, so the institutions that bought from here, they're going to be getting closed out at around break even, and then they're going to be looking to add to further sell positions out of this extreme supply. So that's why this trade works. It's based on, you know, the supply and demands of institutions, and why that setup actually works, because, you know, they have to close the long, well, they don't have to do anything, but more than likely they're going to close the long positions that they use to create liquidity. If they do that at break even, you can imagine there's going to be a lot more sell pressure entering this market, and they can also look to add to further sell positions. Okay, so that's a trade recap on AUD JPY. And yeah, this was called on the weekly watch list and setups video, and I can see a few of you guys actually capitalized on this, which is absolutely great to see there. Okay, so yeah, let me know your thoughts on this one, guys. Okay, please like, comment, and subscribe, and I will see you guys in the next video. Okay, take care, guys. Bye-bye.